Hello students, this is Professor Ketan Shah from JK Shah classes, and today we are going to discuss RTP for May 22 Group 1 Accounting. Today we are going to discuss the revision test paper for May 22 exam and paper 1 Accounting. First and foremost, let me tell everybody that as far as this application and non-application is concerned, whatever list is given here, amendment in Schedule 3, that is the format of the Companies Act, that has been long done. It means you need to write reserves in place of reserves and surplus, property, plant, equipment, that you already know. So there is nothing new here. The application and not application of accounting standards will be discussed when you are doing accounting standards. Today what we are going to do is everything except accounting standards and cash flow. All other topics we are going to do. So coming to question number 1, that is preparation of statement of P&L and the balance sheet. Now, as far as you are concerned, first of all understand that this RTP contains a few points which may or may not have been discussed in classwork questions. But the theoretical aspects of everything is covered. However, we are just going to go through all these things once again. Now, this first question, preparation of profit and loss and balance sheet. First of all, you need to remember that you need to draw the format of balance sheet and P&L. Why balance sheet and P&L? Because all items are given here. Items of balance sheet also and P&L also. Now actually speaking, you should be preparing notes to accounts for only those items which are actually affecting the balance sheet and P&L. However, if a student is preparing all notes, no problem. Only thing is, for those notes to accounts where there is no entries, you have to just keep it blank. So that is a very simple thing to be remembered. Now, as far as this question is concerned, this question is very much similar when I say it means very similar to classwork question number 1. JKSC classwork question number 1. Very similar to that. However, we are going to go through it. Now, all the debit items, one by one, if we just discuss. Land, it is tangible assets. Calls in arrears, less from share capital. Cash in hand, cash and cash equivalent. Plant and machinery, tangible assets. Trade receivable is trade receivable. Inventory is 31st March 21. Look at the date in trial balance. It is 31st March 21. So it is closing inventory. Closing inventory means balance sheet item. So that will go to balance sheet. Cash at bank, again balance sheet. Cash and cash equivalent. Adjusted purchase. Adjusted purchase means adjusted for opening and closing stock. Then factory expense, other expense. All these other expense. Administrative, other expense. Selling expense is other expense. And debenture interest, you can take it as finance cost. Then equity share capital. Equity share capital is share capital. Debentures, long-term borrowings. General reserve, reserves and surplus. P&L, opening balance, again reserves and surplus. Securities premium, reserves and surplus. Sales will come as revenue from operations. Trade payables, provision for depreciation, that is accumulated depreciation, PFD. This will be deducted from the tangible assets. And suspense account. Suspense account, obviously some information will be given in the question. Then additional information. Authorized capital of the company is 80,000. Shares of ₹10 each. This is just information to be written in notes to accounts, note number 1. Then company revalued land at 9,60,000. Now first and foremost, in the trial balance, what you are given is figures in thousands, and here a full amount of 9,60,000 is given, so you should cut 3 zeros first, so 960. Now on the debit side of land, the trial balance, land given is 800, the revalued figure is 960, so there is appreciation. For that, the accounting entry will be land debit to revaluation reserve. The amount will be difference between trial balance amount and the adjustment amount. Trial balance is 800, this is 960, so 160. What will be the effect of this? Effect will be add to land, add to assets, and revaluation reserve will go to reserves and surplus. Then next, equity share capital includes. This word includes means whatever is given in trial balance. Whatever is given in trial balance, this amount of 500,000 includes what? This particular adjustment. So this is again only an information of rupees 50,000 issued for consideration other than cash. Just information. You need to disclose this. Disclose is it in notes to accounts, share capital. Only disclosure is required. Then suspense account of 10,000 represents cash received. Again this word represents. Represents here means it is information about the suspense given in trial balance. Suspense given in trial balance is 10,000. What does this represent? So it represents, I will cut 3 zeros. So 10. Cash received from sale of machinery on 1st April 2020. Cost of the machinery was 24,000 and the accumulated depreciation thereon being 20,000. The balance of plant and machinery given in trial balance is before adjustment of sale of machinery. It is before adjustment of sale of machinery. Obviously, you have to give effect to this particular thing. Now for that, we will prepare one working note. One working note. Working note for sale of machinery. Now, look at the question. Question says the asset was sold on 1st April 20. Cost of the machine was 24 and the accumulated depreciation was 20. So, cost 24, PFD 20, WDV of the asset sold is 4,000, selling price is 10,000. We will cut all the 3 zeros everywhere. So there is profit on sale. When you prepare this working note, all the details given in the question. Now, if you give an accounting effect for that, when the asset is sold, normally cash comes in, so cash bank debit, it is 10,000. Provision for depreciation debit, that is 20,000. 2. asset goes out, so asset credit by the cost 24 and profit on sale is credited, that is 6. Now this was sold, this asset was sold. Look at the wordings on 1/4/20. 1/4/20 is the beginning of the year. So at the beginning of the year we have sold the asset. Our year is ending on 31st March and the asset is sold on 1st April. If the asset is sold on 1st April, then at the beginning of the year we have already received the money. So now we are not going to receive the money again. So instead of cash, we will write suspense debit. Why write suspense debit? Because suspense account was credited on 1st April 20 when the asset was sold. That is why suspense is coming on the credit side of trial balance. So trial balance, suspense account, one effect we want to give, that one effect we are giving it in working note. That means whatever error was done on 1st April is rectified now. Then PFD debit, we will less from PFD. When the asset is sold, the depreciation is reduced. Cost will be deducted from the cost. However, this profit on sale, ideally speaking, this should go as exceptional income. Exceptional income. But ICAI has sometimes shown it as other income. So I believe you write a note and accordingly you give the presentation effect. Give the presentation effect. You may show it as other income. That is what is done in the RTP also. But alternately write a note that it can be shown as an exceptional income. So that is with regard to suspense account that was appearing in the trial balance. Then depreciation is to be provided. So you have to do the depreciation. It is not yet done. Now you have to do it. At 10% on cost. This is for the unsold machine. Unsold machine. So what you can do is in the presentation of your answer, when you prepare notes to accounts, when you prepare these notes to accounts, what you can do is say tangible asset, note for tangible asset, whatever is the note number. In this note for tangible asset, what we can do is first machinery given in trial balance debit, cost is 824. So plant and machinery, cost 824. From that less sold, but the cost price, the cost of that 24. So remaining cost 800. The remaining cost is 800. Then less PFD, provision for depreciation. In the question, trial balance provision for depreciation, opening balance was 150. So 150 minus whatever is sold by us. How much is sold by us? 20. So minus 20. Now, when you add current year depreciation, one effect of current year depreciation will be P&L. one effect of current year depreciation will be P&L. It will be depreciation and amortization. Second effect will be less from asset. But less from asset means we will add it to PFD. So it is 10% on cost. Your cost is 800. 10% of 800 will be 80. So it will be 210. And finally, it will be 590. So this is how you should be doing presentation for plant and machinery, intangible assets. Then adjustment 6. Balance at bank includes 5,000. Includes 5,000. Once again, it is just an information with ABC Bank, which is not a scheduled bank. So it is just information about the bank balance given to you in the trial balance. Bank balance is given to you as 28. So when you write it in notes to accounts, you just have to show the bifurcation. That cash at bank, out of that, with ABC unscheduled bank, ABC Bank Limited unscheduled bank is 5. Cut the zeros. Remaining is others. Then make provision for income tax at the rate of 30%. So one effect will be P&L, main format. Second effect will be short-term provisions. Similarly, trade receivables of 50,000, cut 3 zeros, 50 are due for more than 6 months. This is again only information to be written in notes to accounts. So basically nothing new in this question, but the point is, how do you go about solving this question? When you solve this question, you know you want to prepare the balance sheet as well as P&L. So first and foremost, what you will be having is the format of balance sheet. Complete format of balance sheet. Then you will be having format of P&L. So first complete format of balance sheet, then complete format of P&L, and then you will go with the notes to accounts. Now when you start with the notes to accounts, what you should be doing is, you will begin with note 1 share capital. So what you should do is, when you write note 1 share capital, everything relating to that should be considered by you. Then you go to the next point. So to look at the solution, first you will prepare balance sheet and P&L format. Here they have prepared only whatever is essential. Whatever is not essential, they have not prepared. Now note 1 share capital. In that, first you will be writing authorized capital, that is given in adjustment 1. Only information, authorized capital, only information. So only information you will write down 80,000 shares of 10 each. You will underline that twice. Remember, number of shares to be written fully, but the amount is in thousands. You need to give this heading. If you don't write this, your marks will be deducted. Then issued, subscribed, called up and paid up. So on the credit side of the trial balance, 500,000, that means 10 each. So 5 lakhs is the actual amount, divided by 10, 50,000 shares. So 50,000 shares of 10 each, 500. But on the debit side of trial balance, there is calls in arrears, 5. So it will be deducted calls in arrears. Correct? Then outer column will be 495. This is 495. But in adjustment number 3, Equity share capital includes shares of 50,000 issued for consideration other than cash. Now that is information which should be provided here. This is the information that should be provided. Now either you write it immediately below this or you write it below calls in arrears, it is one and the same. Preferably after note 1, note 2, leave one line, take the total and then go to the next one. Then note 2 is always reserves and surplus. So from the balance sheet, trial balance, you write down all the reserves and surplus where there is no adjustment. Securities premium, no adjustment. So write down securities premium first. Securities premium. Then general reserve also there is no adjustment. General reserve is 150. So write down general reserve 150. Next is adjustment 2. That is for revaluation of land. Now here what happens is, if you are going by this notes to accounts, then you have to write revaluation reserve here, but at the same time you have to add it to land also. Now if you can remember that and do it later, it is well and good. Or my suggestion is, you first write down all the note numbers, leave 5, 5, 6, 6 lines in between, so that you want to give effect to adjustment for revaluation reserve. The second adjustment you want to give the effect. So you write down land at cost in tangible asset. If you have already left lines, then you can straight away in the tangible asset, property, plant and equipment, you can write land. Then whatever is the opening balance, trial balance item, one effect, and then give the two effects for revaluation adjustment, revaluation. So closing balance, you may write closing balance or you may directly write it in the outer column. Second effect, you will write it in reserves and surplus. That is how adjustment wise you should be going, adjustment wise. So first, second and third adjustment over. Fourth adjustment. For fourth adjustment we prepare this working. So accordingly you have to give the effect. Accordingly you have to give the effect. But for that your format should be ready. If your format is ready, you can simply give the effect. But if you are slowly preparing the format, and then it will be a bit difficult to remember that this effect is given and that effect is remaining. So that is one thing that you will have to remember. Then depreciation also. Bank balance. Bank balance is again only an information. This entire plant and machinery, I showed you how to show the presentation. Cash and bank balance. Cash and bank with scheduled banks, with others, that is ABC. You may write this in bracket, unscheduled bank. They have just written with others. You may write it as unscheduled bank. Then provision for income tax, that will be done at the end. Trade receivables 50 are due for more than 6 months. So trade receivables, debts outstanding more than 6 months, others, the total figure. This others is the balancing figure. But preferably in exam, don't make circles. Don't make circles. Just write balancing figure here. This is trial balance figure given to you in the question. Trial balance figure given to you in the question. Bad debts or trade receivables 120. Just an information. Correct? So this is something that you will have to remember. So whenever you are having a combined question, trading, P&L and balance sheet, of course there is no trading account now, only P&L and balance sheet. This combined question, when you draw, it is advisable that you make the full format first, all the notes to accounts, and then keep on giving the effects. However, this is 99% similar to what we had in our classwork section. Now, question B. They are saying current maturities of long-term borrowing are disclosed separately under the head other current liabilities in the balance sheet of a company. You are required to comment in line with Schedule 3 to the Companies Act. Now, as far as Schedule 3 is concerned, with the notification that has come on 24th March 2021, it is to be shown under short-term borrowings and not other current liabilities. This is the new thing that you need to remember. New thing that you remember. There was a notification on 24th March 2021. It is to be shown under short-term borrowings, not under other current liabilities. So whatever the statement given is invalid. So please mark this as important. Normally we have seen that we show other current liabilities, but with this notification you have to show it as short-term borrowing. So that is with regard to the first type of question, that is final accounts. Very lengthy, very exhaustive. So that is question number 1. Now in the same topic, going further, managerial remuneration. Now you've seen that managerial remuneration can be under two situations: when company has profit and when company does not have profit. So what is this question about? They have given the heading as managerial remuneration, but now let us go through the question to understand what is the question saying. The first line is saying balance sheet. Okay, then look at the last paragraph. In between the balance sheet is given, for that we don't have to see anything. The last paragraph says you are required to compute the effective capital. Now effective capital word comes only when the profits are not sufficient. Then this word effective capital will come. So this is a second category, second situation where company does not have sufficient profit. Okay. So they are saying you are required to compute effective capital as per provision of Schedule 5 to the Companies Act 13. Would your answer differ if Jupiter Limited is an investment company? Yes, of course. Also calculate the amount of maximum remuneration that can be paid if no special resolution is passed at the general meeting of the company in respect of payment for a period not exceeding 3 years. Okay, that we will discuss. But for this particular type of question, when profits are insufficient, we first need to calculate effective capital. First we need to calculate effective capital. Now for the calculation of effective capital, it will be advisable if we have two columns. When Jupiter is non-investment company, it means their business is something different than investment. And when Jupiter is an investment company. Now what is the difference between the two? Suppose if I say a company named Tata Steel. The business of Tata Steel is to manufacture and sell steel. So for them, investment if they do, then it means they have not kept that money in steel business. Their investment means they have kept their money in some other business. But suppose if I change the name of the company, suppose if I use the name of the company as Tata Capital, think about it. Tata Capital, their business is to do investment. So for them there is no manufacturing, there is no selling, no, their business is to do investment. So investment made by Tata Finance or Tata Capital, which is an investment company, it is a regular current asset for them. It is not outside the business. Their business is to do investment. That is the difference between non-investment company and investment company. Now, how to calculate effective capital? Calculation of effective capital. First and foremost, you should take paid up capital. So paid up capital, ignore the authorized capital. Ignore the authorized capital. This must be ignored. Take the paid up capital. Preference share capital, equity share capital. So, preference share capital, equity share capital, whether investment or non-investment, amount will remain same. Then the next is share suspense. Now what is this suspense? We don't know. We will have to wait whether to include or not. Then reserves and surplus. So reserves and surplus is the second point. Actually you can give the heading as reserves and surplus. In that, capital reserve but revaluation reserve is not to be taken. So out of 5 lakhs, 60% is not to be taken, 40% you can take. So capital reserve excluding revaluation reserve, 40% of 5 lakhs, that will be 2 lakhs, that will be taken. Because revaluation reserve is not real profit. Securities premium will be taken. Securities premium will be taken. Then next, what you will take is long-term borrowings. Yes, 15% debenture, long-term funds. This is point number 3. You can give the heading long-term funds. Okay, so debentures will be taken, public deposits will be taken. Then whether you take the total in between or not is irrelevant. You may continue further. Public deposits are also unsecured loans, long-term funds. But cash credit is short-term borrowing. Short-term borrowing, anything payable within 1 year is not taken in effective capital. So that is to be ignored. Trade payables are ignored. Then on the asset side, investment in shares. That investment will be deducted for non-investment company. Investment company, it is not deducted because it is their business to invest. Then on the asset side, P&L is given, preliminary expenses given. These are losses. These are losses. This must be deducted. Both. This is deducted. And then they have given A minus B. Now, after this, what you can do is, you can continue your answer further. How can you continue your answer further? Actually speaking, this answer is very abrupt, and below this they have given one statement. Instead, you can continue your answer further. How you can continue your answer further? Effective capital you got. Whether it is for non-investment company or whether it is for investment company. It is 1 crore 80 lakh 80,000. 1 crore 80 lakh 80,000, and second is 3 crore 30 lakh 80,000. Then in the second part of the answer you can write range of effective capital applicable. Range of effective capital applicable. Now, what is the range applicable? If you remember, there are 4 ranges given. From negative to 5, less than 5. Then from 5 to 100, less than 100. Then from 100 to less than 250, and then 250 or more. So here, both are falling in the same category. That is from negative up to 5 crores. Both are falling under the same category. And because both are falling under the same category, their remuneration will be same. And whatever remuneration you will be getting, it will be per annum remuneration. That is point number 3. Maximum managerial remuneration, 60 lakhs. Per annum. If the range of the two is different, then the remuneration will be different. But as a student, in this question it is not coming different, it is coming same. But it will be very advisable that you revise classwork question number 8. Classwork question number 8, where there are differences between the range of effective capital as far as investment and non-investment is concerned. So the remuneration differs. Here it is not differing. Now, something that always all students love, that is profit prior to incorporation. Wonderful topic. Now, as far as this topic is concerned, once you identify that this is a question on profit prior to incorporation, then the moment you start reading the question, you should simultaneously prepare the working note for time ratio, not to it. Immediately you should start. Question 4, working note 1, time ratio. Now for taking the time ratio, you need to take 3 dates. First date of conversion. It is also called as date of purchase of business. That is the first date that you should take. Second is date of incorporation. And lastly, the date of final accounts. Now, look at the question. The partners of Samshed converted their partnership into a private limited company named Smriti Private Limited with effect from 1st January 2020. So they have converted the business from 1st January 2020. So you will write here the date as 1st January 2020. Then, which was incorporated on 1st June 20. So 1st June 20. Then the purchase consideration amounting to 11,40,000 was payable later on an interest of 12% per annum. Okay. But how much will be interest, that we will have to work out once we know what date the payment was made. To make the payment of purchase consideration and meet the working capital requirement, a loan of 17,10,000 per annum was availed on 1st June 20 and the purchase payment for purchase consideration was made. Okay. So, the interest was paid on 1st June 20 and the purchase consideration was also paid on 1st June 20. So here there are 2 more information. Say we will leave 2-3 lines and write working note 2. Interest on purchase consideration. Okay. What will be the interest on purchase consideration? Interest on purchase consideration. The purchase consideration amount is 11,40,000, interest is 12% per annum. So on 11,40,000 into 12% into how many months? From 1st January 20 to 1st June 20. 1st June. So count the number of months. January, February, March, April, May. 5 months. You will not take June because it is 1st June. Tell me, that will come to 57,000. Now look at this time ratio and tell me, this is entirely pre-period, so this interest will come in pre-period. But at the same time, you can also make a working note 3 for interest on loan. See, to make the payment of purchase consideration and meet the working capital requirement, a loan worth 17,10,000 at the rate of 10% per annum was availed. Availed means it was taken on 1st June. So, interest on loan on 17,10,000 into 10% into, now how many months? From 1st June 20 up to, what is the date of final accounts? Date of final accounts is 31st March 21. 31st March 21. So count how many months it will be. Count properly. June you should take because it is 1st June. So June, July, August, September, October, November, December, January, February, March. 10 months. So calculate and tell me on 17,10,000 at 10% for 10 months. 1,42,500. And this is after 1st June. Look at the time ratio. After 1st June it is post period. So interest on loan will come in post period. Understood? Everybody? The company obtained a building on lease at a monthly rent of 19,000 on 1st July 20. So there will be rent also. Rent. But rent will be from 1st July 19,000. Okay. So that we will see. And following is the information is on 31st March 21. That is for 15 months. So your final accounts date is 31st March 21. So pre-period is 5 months. But post-period is how many months? 10 months. So totally it is for 15 months. 1:2 is the time ratio. Then sales is given, COGS is given, discount. Normally discount will be in sales ratio. Director's remuneration will be in post. Salaries will be normally time. But rent you will prepare working note 4. You are already having rent. Rent for the office building is 19,000 from 1st July. So working note 4. Rent given. How much is the rent amount given? 2,56,500. 2,56,500. So rent on, what do they say? Building obtained at a monthly rent of 19,000 on 1st July. So rent on new building from 1st July 20 to 31st March 21. That will be for how many months? 9 months into 19,000. 19,000 into 9, 1,71,000. Look at the time ratio. Entire from July to March post period. So this will go in post period. So balance rent 2,56,500 minus this 85,500. So if nothing is given, this will be divided in time ratio. Time ratio is 1:2. So 28,500. 57,000. After that, you can write one summary. Total pre will be equal to 28,500 only. But total post 57,000 plus 1,71,000, that will be 2,28,000. Total 28,500 plus 2,28,000 should be 256,500. Then interest for that working note 2 and 3, 199,500 is total interest. But look at your working note 2 and 3, 57,000 is pre. So 142,500 is post. Correct. Depreciation time, office expense time, sales promotion time, preliminary expense post. Now this is where I would like you to recollect. Some students misunderstand. They think preliminary expense is paid before incorporation. Beta, in this topic, we are not looking at when is the cash paid. We are looking at whose profit will reduce. The question is not whose or at what time cash is paid. Question is which profit should reduce. So preliminary expense cash is paid before incorporation, but it will reduce profit of post period. So please be careful about that. Now, that is as far as profit prior is concerned. Then sales between June 20 and December 20 were 2.5 times of the average sale, which further increased to 3.5 times in January to March quarter. So tell me how you will find the sales ratio. Say that will be working note 5. Sales ratio. You make an assumption. Write down. Let the average sale be 1 p.m. One per month. So from June to December it will be 2.5. Sale from June to December 2.5. And finally sale from January to March 3.5. Then write down the number of months. Write down the number of months beginning from time ratio. Look at the time ratio. First January. So start with January. Go up to March. However, let me tell you, the presentation of working note, if a student wants to do it in any other fashion, you can do it. Huh? And in exam, of course, you don't have to use different colors. Use one color only. So pre-period is 5 months. 1, 2, 3, 4, 5. 5 months pre. So, write down. It is January, February, March, April, May as 1. But from June to December 2.5. So June to December 2.5. Now the common mistake that student does here is they will collect all ones and all 2.5s and all that. No, you have to do pre-post. 1, 2, 3, 4, 5 is pre. What is the total of post? Total of post. 1, 2, 3, 4, 5, 6, 7. 7 times 2.5. So 2.5 into 7 plus 3 times 3.5. So 28. Now you cannot do anything about it. Your sales ratio will be 5:28. Let it remain like that. And finally, the salaries from July doubled. From July doubled. So working note 6. Salaries. So let salary up to June be 1 p.m. Therefore, from July, salary 2 p.m. Remember, your job is to do pre-post. Again, I am writing all the number of months. You may do it in any fashion you like. Presentation of working note, there is no hard and fast rule that it has to be in this manner. You may do it in any manner as you like. So long as your answer is correct, presentation doesn't matter. So January, February, March, April, May, June, July, August, September, October, November, December. Look at the time ratio and write down the number of months. 1, 2, 3, 4, 5. After 5 months, there is incorporation. Now look at the wordings properly. Up to June it is 1. Purposely 1 is this side. Purposely it is done. Don't collect all 1s and 2s. Do pre-post. Do pre-post. Don't collect all 1s and 2s. So this will be 5 and 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 to the 18 and 1, 19. So the ratio is 5:19. Then, last working note. Sales minus COGS is equal to GP. So sales 37,62,000 minus 22,57,200. So GP 37,62,000. 22,57,200. So I guess it is 15,04,800. This you divide between pre-post and sales ratio. Either you can do this or you can start your answer with sales and cost of sales. This total column not required. Not required unless they ask you. You make basis, you make pre, you make post. Again, here this pre-period net loss you are getting, that goes to goodwill. This goes to P&L. Again, they have shown it in the same line. You have to show one below the other. Understood? Everybody? This is with regard to profit prior to incorporation. Very nice topic, very simple topic. At the same time, very high scoring. But you need to be careful in writing down the various things. Wherever you have prepared working note, write down working notes. Here the working note given is in different fashion. You can do it in a different manner, not problem. As I keep on saying, you can do the working note in any manner as you like. There is no hard and fast rule that you have to do it in a particular manner only. Okay? Presentations all up to your comfort zone. There is no prescribed format given in the ICAI that it has to be in a particular manner. Then, the next point, the next topic, very simple topic, accounting for bonus issue. Accounting for bonus issue. So, Mobile Limited has authorized share capital of 1 lakh equity shares of 10 each. Authorized capital is always only an information. The company has already issued 60% of its capital for cash. So out of 1 lakh, 60,000 shares are issued. Now the company wishes to issue bonus share in the ratio of 1:5 to its existing shareholders. Following is the status of reserves and surplus of the company. General reserve is given to you 1,60,000. Plant revaluation reserve is given as 25,000. But remember, plant revaluation reserve is not a real reserve at all. That should not be used. Securities premium realized in cash. As per SEBI guidelines, whatever profit is realized in cash, you can use it. CRR, capital redemption reserve, is created for the purpose of issuing the bonus shares only. So what is the number of bonus shares to be issued? Now they have given us the ratio. The ratio given is 5:1. So if 5 held, then 1 bonus. Out of 1 lakh shares, 60% are issued. 60% issued means 60,000 issued. Unissued 40,000. So if 60,000 issued, how many shares will be bonus? 12,000 shares will be bonus. Multiplied by face value 10 and the amount of bonus will be 1,20,000. So the answer to the first question is yes, the number of shares to be issued as bonus will be 12,000. 12,000. And in terms of amount, face value, 1,20,000. Second question. Can company issue bonus out of general reserve only? Then but naturally the answer is no. Now here a very long explanation is given. It is the usual practice to utilize specific reserves available for specific purpose. Therefore, if CRR and securities premium are available, then company should utilize these named reserves only in priority of other reserves. So that is why in JKSC we have told you that whenever new fully paid bonus shares are issued, you should first use CRR, then securities premium, then comes all the divisible profits. And among all the divisible profits, first you should use general reserve and then At the end, you should use P&L. So that order is given to you keeping in mind this Companies Act requirement. No. So once you understand that, once you know it, then your answer is too simple. But for a change, I must say that this RTP contains practical as well as a bit of theoretical question. So here, including your practical knowledge, some little bit of theoretical knowledge is given. So you can give a very simple answer. The generally bonus is given first out of CRR, write full form, don't write short form, then securities premium and then other free reserves. Now as regards journal entry, so when fully paid bonus shares are issued, you have to give two entries. Now 1,20,000, first you should use CRR. CRR is 80,000. Then you should use securities premium. Securities premium is realized in cash 60, but we need only 40, so use only 40. Correct? So, two entries. First entry, capital redemption reserve debit to securities premium debit, to bonus to shareholders, 80, 40, 120, that you will get from the working note as it is. But you don't forget to write narration. Narration, if you can write what they are suggesting, it is well and good, but otherwise you write simple narration. Always your narration should begin with bracket opening, then first word should be being bonus declared. Write simple narration, but write something, don't forget. Second entry, bonus to shareholders debit to equity share capital, being bonus shares issued. Now, as far as notes to accounts and the extract is concerned, extract will be only for share capital and reserves. There cannot be anything else. So, note 1, share capital, first authorized share capital, that needs to underline twice. 1 lakh shares are there. Then issued capital, 60,000 shares were there, plus 12,000 bonus, 72,000 shares. But write a note of the above 12,000 equity shares have been issued as bonus shares or fully paid bonus shares. Not just issued as bonus shares, fully paid bonus shares. Then reserves and surplus. So whatever remains here, general reserve remains fully, that you have to write. Plant revaluation reserves fully. Out of securities premium 60, you have utilized 40, so 20 remains. CRR is gone. So plant revaluation reserve, securities premium, general reserve. That's it. They don't even have the habit of taking the total and all. So the wrong thing. Last question. Is it possible for the company to issue partly paid up bonus shares? No. Company cannot issue partly paid bonus shares. That is prohibited under section 63. Understood? Everybody? Very clear? Now, going further, issue of rights shares. Now again, very small thing given to you. Issue of rights shares. How to do this issue of rights shares? Company offers new rights shares of 100 each at 20% premium. So 20% premium, so securities premium will be 20, therefore issue price will be 120 to the existing shareholders on 1-for-4 basis. So I am just writing by way of some logic. I am writing, say, before rights, 4 shares, then they are offering rights. 1-for-4 basis means if you are having 4, they will give you 1. The come right market price of the share is 140. So, come right market price, come right means before right, 140. They are offering at 120. So, after rights, you will have totally 5 shares. What will be the cost? Tell me. 4 into 140. 560 plus 120. 560 plus 120, 680. So what will be the cost per unit here? 680 divided by 5, 136. So what is the question? Question says, what is the value of right? Value of right is 136. Value of right is 136. Understood? Everybody? And X right value of shares is 136. After right means X right. Before right. Before right is come right. After right is X right. And if you want to find out the value of right will be come right price minus X right price. 140 minus 136. It will be 4 per share. But the same thing you can write it by way of formula. Theoretical X right price of share. The same thing. We write it by way of formula. What is that? Come right value of share, value of existing share, plus right shares into issue price, right shares into issue price, divided by existing number of share plus number of right share. Now this is actually nothing but the same logic which I told you before. It is nothing but 4 share into 140 plus 1 share into 120 divided by 4 plus 1. So that is nothing but 136. That is theoretical X right value of share. And how to find the value of share? How to find the value of share or value of rights? Value of right is equal to come right price minus X right price. I have given you logic as well as magic, both. Value of right will be 4 per share. But, my dear students, my dear bachas, for this you can refer JKSC classwork question number 9 and 10, company final accounts. See, bonus shares we have covered along with redemption of preference shares, question number 2. And the issue of right shares we have covered in topic of company final accounts. Redemption of preference shares. That is the next topic that we are doing. A very nice topic, but there is some small point here which we will need to discuss. Okay, one small point. So first let us look at the question. Rohan Limited gives you the following information as on 31st March 21. So balance sheet is given, equity shares, 60,000 equity share of 10 each fully paid, 12% redeemable preference share capital, 5,000 shares of 100 each, less calls in arrears, final call of 20 on 200 shares. Okay, so out of this 5,000 shares, 4,800 shares are fully paid and 200 shares there is calls in arrears. So there is a problem on that. Okay. Then you are having reserves and surplus. Then profit and loss is there, securities premium is there, non-current liability, long-term borrowings, 14% debenture, trade payables, then assets, non-current assets, property, plant and equipment, non-current investment, inventory, trade receivables, bank. On 1st April, Board of Directors decided to redeem the preference shares excluding 200 shares on which there is calls in arrears at 10% premium and to sell the investment at its market price of 80,000. So investment given here in this balance sheet is 1 lakh. It is sold at 80,000. So 20,000 will be loss on sale of investment. So that 20,000 will be deducted from this profit and loss. That is loss on sale of investment. Then they also decided to issue sufficient number of equity share of 10 each at a premium of 1 per share. And the balance in profit and loss account was to be maintained at 1 lakh. So P&L, out of 3 lakhs you have to keep balance of 1 lakh. So how much can you use from P&L? From 3 lakhs, 1 lakh 20 goes. So you can use remaining 1 lakh 80. Use remaining 1 lakh 80. Premium on redemption can't be set off against securities premium, as Rohan Limited is governed by section 133 of the Companies Act and comply with the accounting standard. So you don't use securities premium. You are required to show journal entries and the balance sheet of the company immediately after the completion of redemption as per schedule 2. Show working for the availability of profits for redemption and determination of bank balance at the end. All the above formalities and transactions are completed up to the end of 15th May 2021. So you need to first prepare 2 working notes and then give journal entries. Now, what are the 2 working notes? The important thing is, in the question you are having 5,000 shares. Out of that, calls in arrears on 200 shares. Now the question very clearly said that you are to redeem preference share excluding 200 shares on which there are calls in arrears. That means you can redeem only 4,800 shares and they are redeemed at a premium of 10%. So you will prepare a working note, 2 working notes. First working note, premium on redemption. And second working note, face value of preference share to be redeemed. So 4,800 shares and each share of rupees 100 each. So the total face value is 4,80,000. Premium on redemption will be 10% of face value 4,80,000, that is 48,000. Now I have prepared this working note in this format. In some classes or in some batches, some students may be in the habit of writing equation. It is fine. Presentation can be done in any manner. Not an issue at all. Either you write it in this fashion or you write in the fashion of equation. It amounts to one and the same thing. So, use securities premium only if question allows, but in this question not allowed. So use divisible profit 48,000. Now divisible profit, you know, general reserve, revenue reserve, reserve fund, P&L and so on. But out of that, only P&L name is available. See, only P&L name is available. So, and you can use only 1,80,000. So out of that 48 you use for P&L, for premium on redemption. So how much will be remaining available? I guess 1,80,000 minus 48. So 1,32,000 is available, that you will use for CRR. Proceeds. Proceeds means face value of fresh issue of equity shares. Create CRR out of divisible profit. Now out of the two, when they say that company decided to issue sufficient number of equity share, sufficient, the word sufficient means necessary, whatever is necessary, required, minimum. So what you should do, first transfer CRR or create CRR. How much profit and loss is now available for creating CRR? 132. So you have to make a fresh issue of how much? 3,48,000. But divide this by face value, the face value of the equity share. The face value of the equity share is given as 10. Don't take the issue price. The shares are issued at a premium of 1, but take the face value here. So it will be 34,800 shares. Understood? Everybody? So now, as far as journal entries are concerned, in JKSC we have given you an order, and preferably if as a student you follow that order, it will be well and good. And what is that order of journal entries? Of course, if a student forgets it, okay, fine, but preferably don't forget. Sale of investments, then you are going to redeem only the fully paid preference shares. So demand call, receipt call, receive from CIA, forfeiture, reissue, transfer to capital reserve, all such transactions will not come. I think in our JKSC textbook, redemption of preference shares, page number 136, if I remember right, there is one chart given to you that explains with reason what entries are required, why they are required. So that is the order, that's it, nothing else. So Second will be fresh issue. Third will be create CRR. Fourth will be redemption due. Fifth will be payment. Sixth will be writing of premium on buyback. Okay. Now, as far as the journal entries are concerned, this for us is step 1. Then this 2, step 2. Now they have written application and allotment. You may write direct entry, bank debit to equity capital to premium. Bank debit how much? So 34,800 into 11. 382,800. But equity share capital 34,800 into face value 10 and 34,800 into premium 1. Then creation of CRR step 3, redemption due step 4, payment step 5, writing of premium on redemption step 6. Basically, if you write the entries as per order, it gives a good impression and the JKSIP impression. Anyways, but all transaction must be recorded. That is the point. Now after the journal entries, you know how to prepare the balance sheet. But in that balance sheet, reserves and surplus, remember that 200 preference shares will be coming as it is. This will be coming as it is. We have not redeemed them. We have not done anything as per instruction in question. So you can say to this extent, this was a new point. This was a new point of RTP, that you are not supposed to touch the calls in arrears on 200 shares. They remain as it is. So that is with regard to redemption of preference shares. I believe once you do the journal entries, preparing the balance sheet from that is not so difficult. Calculation of profit available for reserve, that is what we have done here also. The same thing, you write it by way of a note, not necessary otherwise. So that is with regard to redemption of preference shares. Okay, not very difficult, a simple thing, but only thing they asked is don't touch the 200 shares. So leave them as it is and do the rest of the things. Then another most simple topic, redemption of debentures. Now as far as this topic is concerned, mostly all questions, likely questions are there in classwork section. Outside of that, there are slim chances of anything. So revise classwork thoroughly. In fact, this question also to a large extent is similar to one of the classwork questions, say classwork question 7. Very similar to it. So case limited, an unlisted company. Now in this topic they will tell you whether the company is listed or unlisted. That they will tell you. Okay, they have to tell you. If they don't tell you, it is not correct. They have to tell you. If it is unlisted company, now this information other than AIFI and banking and NBFC and HFC, all that is time pass. That is irrelevant. If it is unlisted company, you should remember two things. DRR should be 10% of debenture and DRRI should be 15% of debenture. So that is what you have to remember. Now share capital, authorized share capital is given, okay. Then issued capital is given, 30,000 equity shares, okay. Reserves and surplus, P&L. Debenture redemption reserve is already given to us. Oh, that is nice. Non-current liabilities, 12% debenture, 1,80,000 is given. So you have to check, is DRR 10% of debenture? Yes. Therefore, there is no shortfall. No shortfall. Otherwise, you will have to create DRR. But there is no shortfall. Very good. Then, trade payables are there, property plant is there, non-current is there, non-current DRR investment. So check, is this 15% of debenture? So 1,80,000 into 15%, 27. Oh yes. Why is it running? Hey, come back, come back. Yes, yes. Therefore, no shortfall. No shortfall. Good. Then you are having current assets, inventory, receivables, this, that, and everything. Okay. At the AGM on 1st April, it was resolved. Resolved means decided. Now, this is our classwork question number 7 as it is. As it is. Anyway, to give existing shareholder option to purchase 1 rupee 10 share at 15 for every 4 shares held prior to bonus. Now they are not talking about bonus. Why the hell should they say that? But what can we do? There is no bonus up till now. The ratio given is, if there are 4 shares, then they have an option to purchase 1 share. So 4 held, 1 right. So in the balance sheet issued 30,000 shares. Cross multiply and tell me how many right? 7,500. So this is right issue. Then issue bonus shares. Oh my god. Issue bonus shares. Okay, one bonus for 5 share held. So again, 1 bonus for 5 share held. So 5 held, 1 bonus. Now here I am doing it besides here only. Otherwise, what you can do is make separate working notes. Issue 1 bonus for 5 shares held. So how many held now? In the balance sheet, 30,000 shares were there, and in fresh issue you gave, or right issue you gave 7,500. So 37,500 held. How many bonus? This 37,500 includes balance sheet 30,000 plus right issue 7,500. So 37,500. Okay. So bonus you are getting 7,500 shares. Finally, the 7,500 shares that you are getting as bonus, 7,500 into 10, amount of bonus 75,000. First you should use CRR. CRR is not given in question, not there. CRR is not there. There is only P&L. But there will be some securities premium when you are making some right issue. So according to that you have to use. securities premium will be there, remaining you can use P&L. And then lastly it is repay the debentures. So you should give the entries as per whatever is the resolution, one by one. First, right issue. Now again, for right issue, two separate entries are given. You can combine it. Bank debit 7,500 into issue price 15, but equity share capital 7,500 into face value 10, 7,500 into premium 5. Then securities premium you were not having in balance sheet earlier, but now you got 37,500. So for bonus you will use how much? 37,500. So securities premium debit 37,500, 37,500 P&L, bonus is 75. Then bonus to shareholders 75, to equity capital 75. These two entries are for bonus issue. Bonus. And then for redemption of debenture, you can follow similar steps. First you should sell DRRI. Then there is no fresh issue or CRR. Then redemption due, payment, writing of premium on buyback or premium on redemption. So you can follow that order. See, they have sold the investment at the end. This is step 1. Then redemption due, step 2. Then payment, step 3. Then writing of premium on redemption, step 4, and transfer debenture redemption reserve, step 5. So that is about redemption of debentures. Preparing the balance sheet after the journal entries. I told you, as far as the order of entries are concerned, if you forget something, the dates are not given, so little bit upside down, okay, no problem. But with regard to number of entries, that must be there. Secondly, don't jumble up. Means when you are doing fresh issue or right issue, one entry for that, okay. For bonus, 2 entries, do it. Then redemption of debenture, all the steps. And especially in this kind of topics, where how many entries to be given, in exam you will come to know only and only if you remember this order. Otherwise you will never be knowing whether your answer is complete or incomplete. So that is why I keep on saying, please follow the order of entries. Order is complete, entries are complete, you are satisfied, you are happy, you are confident that your answer is complete. So please remember that. Follow what our professors have been telling you, all your teachers have been telling you. Please follow that. Now, the next question is on investment accounting. A very simple question. It is 12% debentures, so fixed income bearing securities. On 1st April, opening balance is given. So accounting year is April to March. And in the last line, they are telling us interest due dates are June and December, and FIFO method. OMG, FIFO method. I can use like this, no? Yes, why not? So I will first remove this. Now, investment account, everybody knows what to do and how to do. But Now I will be just preparing along with you the working notes. Okay, we will prepare the working notes and especially FIFO method. So two things to be understood here. First is, when you are doing FIFO method, your working note will be more detailed. FIFO cost. Okay. Now in that FIFO cost, first you will write date, then there will be purchase, then there will be sale, then there will be balance. So let us start. First April 20 is the opening balance and the interest due dates are June and December. Correct? So, 1st April 20, year starts. Year starts. So tell me, if the interest dues are June and December, so before this April, what must have been the date? What must have been the interest due date? The interest due date before April must have been 31st December 19. Correct? So now, on 1st April 20, there is opening balance of 4,000 debenture costing 98 each. So opening balance, point number 1, opening balance 4,000 debenture, face value will be 4 lakhs, and amount, tell me, 4,000 into 98, 4,000 into 98, 3,92,000. Then point number 2, accrued interest. Now, whenever a student thinks whether there will be any interest entry or not, so as a student you should remember, if there is a gap between the dates, there will be interest entry. So on face value 4 lakhs multiplied by, it is 12% debenture, multiplied by, from December to April, January, February, March, 3 months. So 4 lakhs into 12% divided by 12 into 3, 12,000. So in investment account, how to write, you know, but now here they have written it opening balance. This is not correct. You should write here to accrued interest, 12,000. Nominal accounts do not have opening balance. Then 1st April 20, this is lot number 1, 4 lakhs is face value, 3,92,000 is amount. In FIFO method, you need to maintain the cost properly. Okay, that is FIFO method. That is FIFO method. Then, next, Look at the question. 1/6 purchase 2000 debenture, 120 come interest. So 1st June there is purchase. So 1st June purchase. How much debentures? 2000 debentures. Face value will be 2 lakhs. Come interest price. It is come interest. 120 come interest. 2000 into 120. 2,40,000. But now you need to break up this amount into two. Break up this amount into two. You should find EIP and you should find interest. Now the presentation here can be in any manner as you like. What I am doing is only one of the methods. If you have studied separate method, preparing working notes separately, it is this only. Only thing is you write it in a different way. But you are writing like this only. Calculations are this only. So once again, face value 2 lakhs, 12%, but calculate the number of months. From December you start. So December is gone. Jan, Feb, March, April, May. June you should not take. 5 months. So how much will be the interest part? 2 lakhs into 12% divided by 12 multiplied by 5, 10,000. So how much will be the cost? Now here you have to look at one of the things. This is where the mistake will occur. Pay a lot of attention. Pay a lot of attention. At the end, question is saying brokerage of 2% for all transactions. Brokerage of 2% for all transactions. So 120 whatever is given to you plus 2%. So 120 plus 2%, 122.4 multiplied by 2000. So your CIP will be 2,44,800. 2,44,800. Out of that 10,000 here, so 2,34,800. Understood? Then when you have purchased here 1,620, purchase 2 lakhs, amount is 234,800. Then here lot 1 4 lakhs, 3,92,000, lot number 2 2 lakhs and 2,34,800. They need to be kept separate. You should not add the two. This is FIFO cost. Understood, beta? Then on 30th June there will be interest due date, hidden adjustment, 30th June. So 30th June hidden adjustment, interest due date, 30th June interest due date. Now you will be getting total interest on face value 4 lakh plus 2 lakhs, 6 lakhs. So face value 6 lakhs in 12% into 6 by 12. Calculate how much interest. 36,000, but this is interest transaction, so it will not be affecting your investment account. It will go in interest column. Then on 1 September sold 3,000 debenture at 110 come interest, but this is sale, so minus 2%. So 110 minus 2%. 107.8. Sale transaction. 3,000 debentures are sold. So 1st September 20. Sale. 3,000 debenture. Face value 3 lakhs. Come interest price. Tell me. Come interest. 107 into 3,000. 323,400. Break up into 2. EIP interest. So interest you calculate, EIP balancing figure. So on face value 3 lakhs, 12%. But from 30th June to 1st September, you should not take September, only July and August, 2 months. Count properly. So 3 lakhs into 12% divided by 12 multiplied by 2. 6,000 is interest. Minus 323,400. So 3,17,400. Now there is sale 1st September. There is a sale of face value 3 lakhs, but what will be the cost? So you will make working note 2. Profit or loss on sale. Tell me. Profit or loss on sale you will calculate. FIFO cost you have to follow. FIFO cost. So you will say selling price 3,17,400 less FIFO cost. But tell me, it is going out of the first lot of 4 lakhs? No. So 4 lakhs face value, cost 3,92,000. So 3 lakh is sold. How much is the cost? Cross multiply. 2,94,000. So 2,94,000 is the cost. So profit on sale 23,400. So the cost is 294. Now how much balance will remain in the first lot? 1 lakh balance will remain. Out of 3,92,000, 294 gone. So 98,000. And second lot of 2 lakhs remain as it is. No change. This is FIFO cost. Understood? Everybody? Then, on 1st December, again there is a sale, but now it is 105x interest, so minus 2%. So 105 minus 2%, 102.90. So sale 1st December, 1st December 20, sale. $2,000 debentures. Face value 2 lakhs. X interest price 2,05,800. So interest. So face value 2 lakhs into 12% into how many months interest? From June to 1st December. 5 months. So 2 lakhs into 12% divide by 12 into 5, 10,000 is interest. But now again you should find out profit or loss on sale. So working note 3, profit or loss on sale. 1st December 20. Selling price 205,800 less FIFO cost. So tell me, first lot 98,000 will come? No. But from second lot, have you sold everything? No. Second lot 2 lakhs face value, 234,800 is the amount. So 1 lakh is sold, total 2. Out of that first lot 1 lakh goes. So second lot 1 lakh will be how much? One lakh 17,400. So tell me, there is a loss on sale. Here there was a profit. Loss 9,600. So on 1st December, again there is a sale of 2 lakhs, but the amount is 98 and 117,400. Now first lot nothing is remaining, second lot 1 lakh remaining, 1,17,400 cost. Is that understood? everybody. So FIFO method becomes a bit lengthy, but can't help it. Then 31st January, but before 31st January there will be interest due date. 31st December 20 IDD. What is the IDD? Tell me. 6 lakhs was there, 3 lakhs and 2 lakhs gone. So now face value only 1 lakh into 12% into 6 by 12. Interest amount will be 6,000 only. Then 31st January, purchase 3,000 debenture, 100x interest, but it is purchase transaction, so plus 2%, it will be 102. On purchase you should add brokerage, on sale you should less brokerage, and whatever price is given in question, on that you should apply, whatever is given in question. Okay, so purchase 31st January 2021, purchase 3,000 debentures. So face value 3 lakhs. Tell me how much will be EIP? EIP 3,000 into 102. 3,06,000. So interest. Tell me interest on face value 3 lakhs into 12%, but only 1 month, no, from December to January. So 3 lakhs into 12% divided by 12, 3,000 interest. So now there is purchase 31st January 21, 3 lakhs and 3,06,000. So now lot number 1 is gone, lot number 2 1 lakh, and it will be 117,400. Now lot number 3 3 lakhs, but it will be 3,06,000. Understood, everybody? Then 31st March 21, year ends, accrued interest. So now the face value will be 4 lakhs into 12% into 3 by 12. So 4 lakhs into 12% divided by 12 into 3, 12,000. And at the end of the year, closing balance must be valued. For that, you take the total here. Closing balance. Closing balance 4 lakhs. Amount 117,400 plus 3,06,000, 4,23,400. but market price of the debenture is given as 105. So 4,000 into 105, 4,20,000. So there will be loss on valuation. 3,400. This is the entire investment account, especially when FIFO is there. All calculations given, investment account, writing it in the format is a very easy job. So I hope you get this clearly. If I want to show the whole page, first you can see this whole page here. I will take 2-3 seconds pause. So the first working is done, then the second working. You may present your answer in any manner you like. The working notes need not be made in this format only. I keep on saying that. Do what you are comfortable. Do what you are comfortable. So that's over. That is investment account. Now going further. Insurance claim for the loss of stock. That's a very simple thing. For the loss of stock, you know, you need to prepare memorandum trading. Again, this closing balance, instead of showing it here, you can show accrued interest. Separate entry. Don't show it as closing balance. Nominal accounts don't have balance. Here also they have prepared number of working notes. Same thing we did it. Loss of stock. A very simple topic. You prepare memorandum trading, statement of loss, and then you have to compare it with the policy. If you are not given the GP percentage of last year, prepare last year's trading account and find the GP percentage. So let us go through it. Fire occurred in the premises of Messrs. Star and Sons. The concern had taken a policy of 70,000 which was subject to average loss. Okay, from the books of accounts the following particulars are available relating to period April to March 20. So this is a fire period. Stock on 1st April 19. So that is opening stock given 1,50,500. Purchases including, actually purchase amount is 3,17,000. So purchase amount 3,17,000, first you should write it in the inner column. Then including purchase of 40,000 for which purchase invoice had not been received from supplier, though goods have been received in godown. This is important. Goods are received in godown, so it should be included in purchase. It must be included in purchase. Then cost of goods distributed as free samples for advertisement, included in the above purchase. It is included. So either you less from this, either you less from this, or you show it on opposite side. It is one and the same. You can show it here also by cost of goods distributed as free samples. It is one and the same. Either, don't do both. Both are correct. You can write it here. Then sales excluding goods sold, but that you bracket you see later. Sales is 4,55,000. So sales 4,55,000. It should be written in inner column. Then excluding goods sold on approval and having a sale value of 35. And then after that they are saying approval has been received. If approval has been received, so add it to sales. So 35. So 4,90,000. Purchase return less from purchase. Wages. Now this is a new point. This is a new point. See, very small thing. Including salary of the manager. So out of this, wages are 55, salary is 10. So wages you will take in trading, salary P&L item you will ignore. Wages you will take, salary P&L item you ignore. Such a small thing. Then average rate of GP 20% on sales. So GP percentage is given. Cost of goods salvage 12,000. So salvage 12,000. This must be deducted. This is balancing figure. One of the most simple questions. Most simple questions. And then find out the loss of profit. Since policy amount was 70,000, but stock on fire date in godown was 83,500. So policy is less. Under insurance, if there is under insurance, average clause will be applied. Round off the claim to the nearest rupee. Okay, so this is fire insurance claim, loss of stock. Messrs. Beta Enterprise bought 3 trucks from Gamma Limited on 1st April 17 on the following terms. Down payment is given. 3 installments to be paid at the end of each year. First, second, third, different amounts. Interest is charged 10% and included in the above installments. Beta Enterprise provides depreciation at 20% on diminishing balance method of the trucks. Okay. On 31st March 20, Beta Enterprise failed to pay third installment, upon which Gamma Limited repossessed 1 truck. Gamma Limited agreed to leave 2 trucks with Beta and adjusted the value of 1 truck against the amount due. The truck was taken over was valued on the basis of 30% depreciation annually on WDV. Balance amount remaining in the vendor's account after the above adjustments was paid by Beta Enterprise after 2 months with interest at 18% per annum. Calculate the cash price and the amount of interest paid with each installment. Prepare truck account, this account. Okay. Now, this question is very much similar to question 16 of JKSC textbook. Very much similar, very similar. So first let us do working note 1. Calculation of cash price and interest. Now one more thing that you should remember is that as far as working note presentation is concerned, you will once again do it in the manner in which you find yourself most comfortable. Working notes presentation need not be in a particular format only. So we begin. It is purchased on 1st April 17. So 1st April 17. Cash price less down payment. So down payment is given to us. Down payment is 6,50,000. Down payment is made on the first date itself. So outstanding, I am writing in short now cash price. Then on 31st March 18, interest will be charged. Interest will be charged at how much percent? 10%. So then you will get total. Then from that less first installment. So the first installment is 3,55,000. First installment is 3,55,000. So now we will be getting outstanding cash price on 1st April 18. Again on 31st March 19 there will be interest. Then there will be total. Then second installment. So second installment is 3,38,000. I saw it right, yes, 338. So 1st April 19, outstanding cash price. Then 31st March 20, interest, total, third installment. This is the last installment, 3,30,000. After that, outstanding cash price must be 0. So now, when we go reverse working, since outstanding cash price is 0, this amount should be 3,30,000. Interest is 10%. So assume this outstanding cash price as 100. This is 10. This is 110. So do the reverse working. You will get interest as 30,000. So the principal as 3 lakhs. Go reverse working, 3 lakhs plus 338, 638. Again, this has 100, this has 10, this has 110. So tell me, cross multiply and tell me how much. 6,38,000 divided by 110. Interest will be 58,000. Interest will be 58,000. So minus 6,38,000, 5,80,000. So 5,80,000. So 9,35,000. So now outstanding cash price 100, 10, 110. So interest is 85,000. Correct, no? Interest will be 85,000. So 8,50,000 plus 6,50,000. Your cash price will be 15 lakhs. So this is number one thing. Then we will make working note 2. calculation of depreciation. Tell me, the beta enterprise depreciates 20% diminishing balance. So same date, 1st April 17. There are how many trucks they have purchased? How many trucks have they purchased? 1 truck, 2 truck, 3 trucks. 3 trucks are purchased. So cash price 3 trucks 15 lakhs. Then 31st March 18 depreciation 20%. So 3 lakhs depreciation. So WDV 1st April 18 WDV 12 lakhs. Again next year depreciation 31st March 19 depreciation 20% WDV. So 2,40,000. So once again 1st April 19 WDV. Tell me 12 lakhs minus 2,40,000. 9,60,000. Then once again 31st March 20 depreciation 20% WDV 1,92,000. So 1st April 20 or you may say 31st March 20, one and the same. The WDV 7,68,000. Now out of that, how many trucks he will leave and how many trucks will he repossess? 1 truck repossessed, 2 trucks left. So 1 truck repossessed, 2 trucks left. So divide this ratio, this amount into 1:2 ratio, the book value that you will get 2,56,000, and here the book value will be 5,12,000. Then working note 3. Calculation of agreed value of 1 repossessed truck. So 1 truck will be 5 lakhs, 3 trucks is 15 lakhs. So 1,470 cash price 5 lakhs. But Now for the purpose of repossession, it is to be depreciated 30% for agreed value. So 31st March 18, depreciation 30%. So 5 lakhs into 30%, 1 lakh 50. So 1st April 18 WD 3 lakh 50. Then 31st March 19, depreciation 30%. 1 lakh 5,000. So 2 lakh 45,000. 1st April 19 WD. 31st March 20, depreciation 30%. 73,500. So agreed value 171,500. So as far as the HP buyer is concerned, book value is 2 lakh 56. But agreed value is 171,500. So how much will be lost to buyer? Lost to HP buyer. 2,56,000. 84,500. Look at the 3 working notes. First, this 2. I will take 1 second gap here. Then 1 second gap. Then 3rd working note. And once all these working notes are prepared, preparation of ledger account is just a formality. I am sure you can prepare all these ledger accounts. There is nothing I have to teach you there. Yes, but the only new thing or one thing that you remember is in the 4th year, normally in the 4th year, after 2 months the account was settled. So this is important. This is important. Whatever balance you get on that 2 months interest at 18%, and then the account is settled. So that was very important. Okay. Then departmental account, actually this is 100% same as classwork question number 3. No new point. No new point. Absolutely no new point. So there is nothing I have to teach you there. Okay. The second last question that we are discussing is accounting for branches. Now this is a very unique question. Unique question because they have asked certain particular things. Let us go through it. Mr. Chinnaswamy of Chennai trades in refined oil and ghee. It has a branch at Salem. He dispatches 30 tins of refined oil at the rate of 1500 per tin and 20 tins of ghee at the rate of 5000 per tin on 1st of every month. So on 1st of every month. So if I say one is refined oil and the other is ghee, every month he is sending 30 tins of refined oil. So every month 30 tins of refined oil, 20 tons of ghee. Refined oil is at the rate of 1500 and 5000. So if I multiply it by number of months, 3600, 2400, these are the total tins, multiplied by 1500 for refined oil and 5000 for ghee. So what will be the total goods sent to branch? $3,600 into 1,500. Oh, so there is a mistake here. 30 into 12 will not be 3,600 and 2,400. It will be 360 and 240. Isn't it? So that is how you should be doing it carefully. So 5,40,000 and 240 multiplied by 5,000 will be 12 lakhs. Then branch has incurred expenditure of 45,890, which is met out of the collections. Means remittance will be reduced to that extent. Correct? Then following other details are available. Purchases is by head office. Branch does not purchase. Then direct expense are by head office. Expenses paid by HO. Then sales are given. Collection during the year is given. Remittance by branch to head office is given. Okay. Then head office balance you are given opening closing balances. Similarly, branch also opening closing balances are given. Branch also opening closing balances are given. Then some additional information. Building is purchased on this date by head office. Depreciation of furniture and building already adjusted in above figures. Already adjusted. Then branch manager is entitled to 10% commission on branch profit after charging his commission. So you should be taking 10 upon 110. General manager is entitled to a salary of 20,000 per month. So 20,000 per month into 12. 20,000 into 12. 2,40,000. And general expense incurred by head office is so much. All these transactions details okay, but you are requested to prepare branch account in head office books. Single account, only branch account. So this is debtors method. And also prepare Chinnaswamy. Chinnaswamy means head office, trading and P&L, excluding branch transactions. So you don't want branch transaction. That is something new. So two things. One, you have to make debtor system branch account, and second, you have to make head office trading account, trading P&L account, but excluding branch. Okay. But first, in the books of Chennaswamy, that is head office, branch account. Debtor system, you know, opening assets debit. Then any transaction between HO and branch, where branch is receiver, debit, branch is giver, credit. Any transaction. So let us go through the entire question. First, opening balances, opening and closing balances. So branch opening stock 22,500, ghee 40,000. So opening stock debit side 40,000, 22,500. Debtors 1,80,000, cash in hand so much, furniture so much. So debtors, cash in hand, furniture. Then closing balance is given to you. Whatever is not given, prepare working note and find out. So closing balances 19,500 refined oil, ghee is given. Debtor, creditor, prepare working note, prepare cash bank account and find out. Then furniture and fixture is already given to you after depreciation, so that will also be done. Debtor, creditor, working note is prepared. That means you are preparing either cash account, debtors account. See, branch debtors, opening balance is given, opening cash is given, opening debtor, opening cash. Then these are working notes. Now going through the transactions. Let us go through the transactions. Firstly, in the first paragraph, goods sent to branch. Branch is receiver. So branch account debit to goods sent to branch. Branch account debit to goods sent to branch 5 lakh 40, 12 lakhs. Then expenses paid by HO. Branch is receiver. Branch is debit. Then sales is made by branch. We assume it is entire credit sales. So credit sales, branch debtors, working note. Branch debtors, sales made 595 and 1450. Collection during the year. So if the collection is made, cash to debtors. Remittance is given, so branch is giver. Remittance will also come in the debtor system. Remittance, head office giving cash to branch, branch is giver. Understood, beta? Simple question. Of course, and branch has made expenditure of 45,890 from its collections. So in cash account credit, so you will get this as balancing figure, you will get this as balancing figure, that you will write it in the credit side of branch account. Credit minus debit you will do, you will get the profit, but then you have to give manager's commission, so you will take 10 upon 110. How you got this 226,930? Credit minus debit up till this stage. So preparing this debtor's account, a very easy thing. Same way you have to prepare only head office transactions. First, head office, opening stock is given, building is given, furniture is given, but all this building furniture will be coming on the asset side. So opening stock is given 44 and 1065. Building furniture only depreciation will be written. Closing stock is given, so trading account credit side 890, 1570. Building furniture will be going in the asset side. Then purchase. So purchase will come on the debit side, but from that whatever goods sent will be deducted. Either you deduct it from here or you write it on opposite side. It is one and the same. Effect is one and the same. Then purchase is done. Direct expenses in trading account. Then sales is given, so trading account credit side sales 2410 38 lakh 40,500, and then the remaining adjustments for the purpose of calculation of depreciation. For the purpose of calculation of depreciation in P&L. Wait. Depreciation for furniture, opening and closing balance, furniture and fixture 10%. So furniture difference between these two is depreciation 88,600 and 79,740. That is depreciation. Building you will have to take the opening balance. To that you have to take addition and less closing, so you will get depreciation. Then next, branch manager's commission is something that is given out of branch. Then general manager's salary 240, so general manager's salary 2,40,000, general expenses 1,86,000. So simple, net profit is balancing figure. So basically branch account, a very simple thing, but most students will not look at this last sentence and understand exactly what is to be done. So that is something that you will have to pay attention and be careful at. So that was with regard to branch account. A very simple problem, straightforward, no much calculations involved, but only thing is the question is made in such a way that at first look people will think, what the hell is this? How to do it? I've never seen in this life before. So new presentation, but a simple question. Now the last question that is on single entry, I would have loved to explain this, but it is 100% match except one or two figures with JKSC classwork question 4. No new adjustments, everything same. When I say 100% match means, of course, the name of the person differs and amount slightly differs here and there, but absolutely same question. So there is nothing new to be taught to you here. You can go through our classwork JKSC question number 4, little change in the figures here and there, rest everything is same, all adjustments same, everything same. So this is where I would conclude. Remaining questions will be taken up in your AS session, that is framework for preparation and presentation of financial statements, and all other questions relating to accounting standards. So that is everything here. Complete detailed discussion of RTP for May 22. Students, please be assured there is nothing absolutely new in this RTP. Whatever you have in your JKSC book covers almost everything. So that's it. Thank you all. Wish you all the best.